We are the group 2 of the subject Strategy, Cost, and Management. And we're the group who will talk about the objective, scope, and role of management accounting. So in this video guys, we're gonna talk about management accounting and its uses and its role. Also, we're gonna talk about some additional information regarding management accounting. And lastly, the main differences between the cost accounting, management accounting, and financial accounting. So this is it. Objectives, role, and scope of managerial accounting. So our lesson objectives is to identify differences between management, cost, and financial accounting, controller and treasurer, line and staff function. Second, gain an understanding of the role of a CMA. So what is management accounting? So when we say management accounting, it is the process of identifying, measuring, analyzing, interpreting, and communicating information in pursuit of our organization's goals. Next is the core difference between financial, cost, and management accounting. The financial accounting. It is used to keep the record of transaction and determine profit and loss in the financial status of the firm. And it is concerned with historical data, and it is governed by the GAAP. Qualitative data are not recorded. Cost accounting is used to allocate, ascertain, accumulate, and accounting for costs. It is concerned with past and present recorded data, followed for keeping a record of cost. Only qualitative aspects are recorded. In management accounting, it helps management in policy forming and decision making. It deals with estimation of data for the future. No set principles followed in management accounting. This is both qualitative and quantitative data aspects.
Controller versus treasurer. So controller, or also known as comptroller, is the head accountant of the company. They supervise other accountants and oversee the preparations of financial reports. In large organization, controller reports to the chief financial officers or the CFO, monitoring internal control, analyzing financial data, as well as preparing budgets. They are also in charge of your tax compliance and see to it that deadlines and regulations are strictly followed. Treasurer. They are the protector of company's value and finances from financial risk, interacting with shareholders, bankers, and current potential investors. They are in charge of obtaining loans and credit from outside sources, generally involve cash management and making sure that financial goals are met.
Once we're through with organizing function, we know exactly what types of people or staff we need, right? So aside from that, we should also understand at this point in time the difference between line position and staff position. So as for line position, it is directly involved in a day-to-day operations of the organization. These primary activities includes on sales, production, and marketing. Staff position are those who serve or support indirectly on the line positions. They provide support, advice, knowledge, and even providing resources to line positions so that they can achieve the objectives of the organization.
What is a Certified Management Accountant or CMA? Certified Management Accountant is an accounting designation that signifies expertise in financial accounting and strategic management. It is a globally recognized credential with a special focus on corporate finance and management accounting. This professional certification is offered by the Institute of Management Accountants or CMA. Institute of Certified Management Accountants or ICMA is a division within IMA which awards CMA certification. IMA is headquartered in New Jersey and has reached in over 140 countries.
CMAs work in accounting, corporate finance, and strategy teams in an organization. CMAs analyze and parse data from multiple sources to inform performance improvement. Additionally, they do not only crunch numbers for internal review and budget analysis, but also contribute to the strategic business decisions by providing insights into the financial condition of the company. Furthermore, they coordinate with the performance managers to propose improvements regarding the financial strength of the company. These professionals may be called cost accountants, risk managers, budgeters, corporate accountants, management accountants, financial strategists, and executive decision makers.
Duties of certified management accountants, or CMA, are a certified professional qualified to areas of financial analysis and financial planning, such as budgeting and forecasting, internal control, reporting, and professional ethics. Hence, the typical CMA works experience can be broadly summarized as follows. Identify opportunities for investment management. Second, act as a mentor and supervise lower-level accountants. Prepare financial statement, income statement, balance sheet, and cash flow statement. Fourth, make presentation to senior management. Fifth, create strategies to improve and manage various internal and external risks. Sixth, arrange funding and financing options.
Ethical principle of a CMA. Members of ICMA shall behave ethically. A commitment to ethical professional practice includes overarching principles that express a CMA's values and standards that guide a CMA's conduct. As a CMA, they should have principles and standards to practice, not just inside the company, but also in their lives outside of work. But first, we must know what are the principles and standards that a CMAs should follow. Principles. ICMA's overarching ethical principles include honesty, fairness, objectivity, and responsibility. All CMAs shall act in accordance with these principles and shall encourage others within their organizations to adhere to them. Standards. A CMA's failure to comply with the following standards may result in disciplinary action, including disbarment from membership.
So the first one is competence. Each member has a responsibility to, first, maintain an appropriate level of professional expertise while continually developing knowledge and skills. Second, each member should perform professional duties in accordance with relevant laws, regulations, and technical standards. Third, they should provide decision support and business analysis information and recommendations that are accurate, clear, concise, and timely. And fourth, they should recognize and communicate professional limitations or other constraints that would preclude responsible judgment or successful performance of an activity. The second is confidentiality. Each member has a responsibility to, first, keep information confidential except when disclosure is authorized or legally required. Second, inform all relevant parties regarding appropriate use of confidential information. Third, each member should monitor subordinates' activities to ensure compliance. And fourth, they should refrain from using confidential information for an ethical or illegal advantage.
Each member has a responsibility to, number 1, mitigate actual conflicts of interest. Number 2, regularly communicate with business associates to avoid apparent conflicts of interest. Number 3, advise all parties of any potential conflicts. Number 4, refrain from engaging in any conduct that would prejudice carrying out duties ethically. Number 5, abstain from engaging in or supporting any activity that might discredit the profession.
And the last ethical principles of a CMA is credibility. Each member has a responsibility to first, communicate information fairly and objectively. Second, disclose all relevant information that could reasonably be expected to influence unintended users' understanding of the reports, analysis, or recommendations. Third, disclose any delays or deficiencies in information, timeliness, processing, or internal controls in conformance with the organization policy and or applicable law.
Resolution of ethical conflict.
these policies do not resolve the ethical conflict, you should consider the following courses of action. First, discuss the issue with your immediate supervisor except when it appears that the supervisor is involved. In that case, present the issue to the next level. Second, if you cannot achieve a satisfactory resolution, submit the issue to the next management level. If your immediate superior is the chief executive officer or equivalent, the acceptable reviewing authority may be a group, such as the audit committee, executive committee, board of directors, board of trustees, or owners. Contact with levels above the immediate supervisor should be initiated only with your superior's knowledge, assuming he or she is not involved. Communication of such problems to authorities or individuals not employed or engaged by the organization is not considered appropriate unless you believe there is a clear violation of the law. Third, clarify relevant ethical issues by initiating a confidential discussion with an ICMA Ethics Committee representative or other impartial advisor to obtain a better understanding of possible courses of action.
Now let's answer the frequently asked questions. Number 1. Can the reports presented in management accounting be used for external reporting purposes? The answer is no. Since management accounting do not conform with generally accepted accounting principles, reports prepared under management accounting cannot be used for external reporting purposes. Its focus is on the internal reporting and is solely for the company's decision making. Number 2. Can I obtain the license of certified management accountant here in the Philippines? The answer is yes. The Institute of Management Accountants, or IMA, has reached in over 140 countries, and one of these countries is the Philippines. There is a review and examination conducted here in the Philippines to obtain the title of Certified Management Accountant.
So here's the sample number 1. Ivy is an accountant. Being her as an accountant, she is heavily involved with the record keeping and the reporting of the assets, liabilities, and the stockholders' equity. What kind of accountant is Ivy? Letter A. Management accountant. B. Financial accountant. C. Cost accountant. And D. Practical accountant. The answer is letter B. Financial accountant. Financial accountant because she is tasked to do the reporting of the financial statements. Joshua, an accounting staff, notices an error of the financial statement. He notices that instead of 12,000 pesos note payable, it posted 16,000 note payable in the financial statements. Who is liable to associate the task of this kind of problem? Letter A. Financial accountant. B. Management accountant. C. Cost accountant. And D. Accounting staff. The answer is letter A. Financial accountant. Because an error occurs in the reporting of the financial statement, and the financial accountant is the one who is liable and responsible for the correction of an error in the financial statement.
So that's it, guys. I hope that you've learned something about our topic. If you have any questions, just leave a comment on this video. Lastly, don't forget to leave a like in this video and subscribe to my channel Sterilization Video for more videos. So that's it. Thank you for watching and God bless us all. Bye-bye.